How's it going? Welcome back, guys. So today I'm gonna go over this trade from 13th of November. This is the last trade I took on this XFA. Currently have well, I have another XFA and 150K combine, and you've seen this happen on my channel many times now. All the trades and everything, and it's gotten me to this point more or less. Decided why not I stream now. And yeah, from this XFA alone, you've seen on the resale video, took my first payout, and pretty much yeah. So that's why the MLL is now kind of reset. So goal is now to build this to 3K or 2K and take another payout from there and just keep it going pretty much and scaling the risk as I take payouts. I don't want to be taking too big of a payout, but not too small of a payout. And the main goal is to scale the risk until this 150K combine is passed, and then have two of these with minimal risk, and then whilst passing another 250K combines as well. The goal pretty much scale risk and scale funded accounts at the same time. I might make a separate video on that and how that's exactly done, how to actually look at the funded space and everything. I wanted to go over this trade here and pretty much why I was bearish on this day. Let me just, it's so good. So first and foremost, this is journaling pretty much. Right, so I'll just take these randomly. As you can see, this is the day before, sorry, the day on 12 a.m. Do my analysis, everything. But so the main part would be where I said it was bearish and why. And I was bearish on this day. It was quite obvious. But the main distinction was if you go all the way up here, 13th of November, is this is Asia's high right here. Okay. So if this is Asia's high over up here, you can see how London session just ticks it and then they leave London high. Whenever they do this, where they either leave Asia high and London high and they don't come back to them at all, or they just tick Asia's high and they don't go above it like by 100 points and then come lower. It's just like a little wick above it. It means the market is really sensitive, like super sensitive. And if you align that with the daily time frame, I essentially call these daily highs. If I held this, I would have made a shit ton of money, but well, basics, I guess. But whenever they do this, pretty much uh, where they take the Asia high and they don't go above it much, and then they do the same in London where they fail to come to it. Even here, you can see in 8 o'clock, you can see it just ticks it, wicks it a little bit, and then it just dies down. It's pretty much indicative of a one-sided market profile. ICT has not taught this yet. I mean, he's taught one-sided markets, but he's not taught this specific function, or maybe he has, and I haven't gone over it. But this is just something I've identified myself over statistical data, and you'll see it happen a lot, pretty much. And sometimes, like this Friday, it will reverse, but Friday has its own reversal profile. That's why it does that. Like at the 9:30 opening bell, Friday it was one-sided, but then it just reversed full on. Sometimes it will do that. Still trying to identify why it does that, but I'm pretty sure it's just Friday in itself is a one-sided market profile. So yeah. So going into this trade in it, right, yeah. So this was the first trade I took, and whenever it's a one-sided market profile, you don't want to really do this. You want to go to you don't want to go to the H4, and then because the dealing range would be um, the dealing range would be this high to this low, okay? And that low was a made, so it'd be this high to this low. But you don't really want to wait for that dealing range to be hit because it's usually never going to get hit in a one-sided market. Like a one-sided market can have really big imbalance days, humongous imbalances like these, where it doesn't offer a retracement till way later. So the best thing I found out to do is you need to go to the 1 minute or the 15-minute time frame, and it will offer a retracement there for you to take your setup. You also don't want to be buying the narrative. So you could buy this right here, but it's not a really good trade, as you can see, because if you say you did buy the 2022 model here, your market structure shift right there, and then you wait for your imbalance, which is here. You'd have to wait through all this shit for it to go up. It's not worth it. So the first trade I took was actually right here, and it's simply just a 1 minute dealing range. And let's see how this goes. So like you mark out this high to this low, right? So you got a 1 minute dealing range right here. You could say that is also a 15-minute dealing range. And by the way, the reason this looks like so scattered because I take most of my trades in the 30-second to the 1 minute time frame for execution criteria. For the actual criteria of the setup, I do align it with a higher time frame. Like for example, we've got this big trend line here, but I took this in itself in the 30-second time frame, including this one as well. And I'm gonna journal this later because I've actually journaled this day. But sometimes I do a mistake where I accidentally enter on the breaker instead of entering on the stop hunt. I've done this a couple of times now, and it's a habit I have to stop doing. But luckily enough, I got out on this trade with low risk. Because I usually only put in low risk at the start, and then once I see more change state of deliveries, I'll add more risk on, kind of like I did here. So here, 30-second, bought back here, and I re-entered on the octal trade entry. We'll go over that though. So this was the initial entry right here. It's got your 50%. Why would you enter right there? I've got the 30-second time frame. Oh wow, that's going to take a while, isn't it? All right. So the 30-second time frame. And you can time price as fractal. You can literally enter on the 1 second time frame, and your model will still work. So long as criteria is there, it usually does work. But well, let's see here. I don't know what that is. Oh no, this is the original. So yeah. So this was the model right here. And what I likely did, I did this, I'm pretty sure. So yeah, 50% retracement, as I always. So sometimes if I miss the move out with the SIST was made, but this is usually a fake kind of SIST. It's usually like, people chasing head and shoulders and you want to enter on top of it, not below it. Target the neck, sorry, target the neck and don't expect the head or whatever. But it's just basically you're just targeting a order block right here, not there. It's usually fake, and the 50% was above it. It's also got imbalance here, breaker, and an order block. And it's one-sided, so you shouldn't really expect it to come to these highs yet, but it does come to it later. All right, you can see it comes up, and I actually have this at 11:57 in anticipation for the 12 p.m. macro, which is the 7 a.m. macro. It does come up, does not take this high, so it does come very close stop loss. It's a bit of a, I would say this was the best type of setup. Like this is more of a setup, not a plus setup, because yeah, this was what I was mainly aiming for was this, but then we already took it, but it was already smooth when it took it, so it was a bit weird one, and we had this imbalance here as well. So whenever there's an imbalance in line with the sell side liquidity, fast when it goes to it. I'd say the only thing I did wrong on here was I should have really closed it at 2R, but because it was a one-sided market, I was actually trying to aim for more of the range. You can see this actually does offer 1.9R. So I could have closed it right there. Not call it a day, but like wait for this better setup and then took it, which I did. So I would have made profit here and made more profit here. But fortunately, this one actually, because I scaled in, it did hit a small loss, and that's fine. Because I ended up scaling in right here. You can see And I think this was the 1 minute. Check. So yeah, so we have this would be a second stage distribution. So you'd basically take this and this, right? Yeah. I didn't count this as a third stage distribution only because it was this what they call it now. It's not below it. To me, it's not a third stage distribution. And it wasn't like a proper retracement either. Neither was this one because it didn't come into a proper CB. Like when the retracements come into CB, this ended up coming into the OTE, which is where I scaled in. There was also an inversion here somewhere. I remember the thing is came lower. Then I think I tried my stop something, and then something happened, and then it went up. Whatever it is. Eventually, it did come into this order block. So you could say this was all internal range liquidity. And not to say you can't trade internal range liquidity. Sometimes I do get out to risk to reward on internal range liquidity, and then I just take the SAP right after it, and then I show that as well. So you can like take the inducement as a sell, and then you can take the actual real sell as well. So long as you know what the market makers are doing, and the algorithm is going, then most of the time you can get out with it. But in the end, when this moved up, look at this. Like you got retail buying here, buying, and this is why you don't buy retracements in a imbalance profile, in a one-sided market profile. So when I went here, look at 30-second time frame again. You can see the CST was made right here. The only thing was, I think, and I'll have to, is that yes, the CST was made, and yes, I think I ended with at 597.75. Sheesh, I entered quite low, don't I? Yeah, I entered really low. Okay. But I entered one here, 599.25. Let's just say I entered right there. Pay a stop, it didn't really offer much R either. You know, like 0.4. So the mistake predominantly around here was, I would say, was even though it did take the buy side here, it didn't take it like it did here. You know, like where it was an imbalance, another imbalance top of it, and you get your balanced price range. So this is usually the better kind of stop up to go for. But I did see a SSD form here within this, and I was anticipating this to become an inversion. Why? And this was low risk, by the way. As you can see, there's only two micros. So I only went $50 risk here. But so we got this right here. So you can see it's coming inside of it, and then we got SSD forming here. So I would anticipate this to be an imbalance very much. Another reason is because you've got sell side here, and we had a phantom forming as well within the internal range. Like these candles were here pretty much. So the phantom would be like this, and then retail will constantly be buying that. Another reason as well is the SST formed inside of this order block right here. And the order block formed in specifically was this one. But if you look where it formed in this order block, it was the mean threshold. And then you want to align that with the higher time frame to see if there's a wick forming at that mean threshold for weakness. Higher time frame in this instance would be 1 minute or 2 minutes, something like that. And I have like at least 5 charts on my thingy, on my screen, so pretty much yeah. So you can see the wicks are forming there. So it's just indicative of weakness when it does that. Just keep going, I guess. There you go, more wicks. So the higher time frame you go, the more area. It's gonna make either a short-term move or a longer-term move. There you go. Just a higher time frame you go, you get more wicks. So that's ideally what you want. And then from this execution, I could have and I would have gotten like a really big risk to reward, but the main aim was really just to recover some of that loss and then re-enter on a confirmation entry. So 25609.50. So I entered a little bit after that change state. Sometimes then I'd anticipate the candle itself and then the change state, but you could say I entered at the inversion high. Stop was right here, and got out at 25596.75 right there. I got out a bit early for just a humble 2.04R. Could have got out at this sell side, but I was waiting for the confirmation because I saw this right here. This it came into this imbalance right here. This was probably a breakaway gap. So when it came into this imbalance, this to me is a retracement because it failed SCBM. It also wicked it, and third of all, it formed a change state of delivery. Whenever it forms a change state of delivery, uh, it's it's optimal for a optimal trade entry. And optimal trade entry, you don't always need to enter the 62. Sometimes it comes to the second 60 itself. It's like something ICT. Well, actually, he probably has taught it, but yeah. So, and this is all in line with where it's in a premium market. Right? It doesn't need to be in the H4 premium all the time, and when it's a one-sided market profile, it's above this area. Pretty sure if we was to backtest this again as well, it should be in an extreme premium. Nope, that's where this was. This was an extreme premium. But anyways, so this retracement from high to low, we have an imbalance here as well. This was optimal trade entry. So I went short here, 3 micros. And this was in good equity as well. With that roughly 3.9 risk to reward till it hit me break even. It didn't actually hit me break even. I trailed my stop to this high with the third 60 was made, but the third 60 in the 30-second was actually made here. So if I put my stop here, it would have been more better. This actually became internal range liquidity. But it is what it is. And then it actually stopped me out here. So it stopped me out in a trail though, meaning I still made a bit of profit on this. And I made about 0.77 of that $50 risk. When that happened and it shifted lower again, clearing the sell side, it was still, as you can see, left smooth right here. And sometimes it'll do that because it will offer next retracement up and then really clear out. Why does it do that? Why does it offer next retracement? If you were the guy buying here, because you'd probably buy from a discount, right? In a H4 discount, something I used to do a lot. But with a one-sided market profile, it's just going to go down. To be honest, it's not gonna like be bought at a discount and then go all the way up to a H4 dealing range discount, sorry, premium, and then go lower. It's an imbalance, so it's going to keep going lower. So when I saw this, really, um, all I did was get a 1 minute high to the low right here. Let's clear this out, and then so you got this premium now. So within this premium, this was also a 2022 model. Was also part of my own model as well. And this imbalance around here hasn't formed yet. And what has formed below this is another phantom. The trend line, sorry, retail by this trend line. What also formed here was smooth lows, and we have more imbalances here. This imbalance is already filled, but there was more imbalances below, as well as I actually got out at the lunch low, sell side, but and then but I was actually aiming for this line. This line is actually an opening range gap high from Monday, which the consequent encouragement was not filled, but the low was tapped on Monday, I'm pretty sure. So usually when they do that and it's Thursday or Wednesday and they have a come back to it, it's usually a like a really easy draw on liquidity. It's not like you got to go into the daily and then find some bloody candle to tell you where the market is going. It's not that. It's usually always going to go to that opening range gap from Monday. And seeing that Monday and Tuesday and Wednesday already formed those wicks for the highs, it was basically just indicating that Wednesday was high of the week. And if you, and then that means Thursday would probably be a continuation. So that means Thursday would have to go to an opening range gap from Monday to fill it back in. So that's what this low was pretty much. And I was actually aiming for the constant encouragement in the lunch low. Lunch low came really close to that constant encouragement, I think. I think this was the, oh, pretty sure. No, sorry, it was a lunch low from a different day. That was, yeah. So would it make sense that these ones also, yeah. Oh no, this is not an org low, that's why. Okay, no, it's, wait, let me check. Open trading view. Actually, I could check here much better. Which right now was basically there was a open range gap here, I'm pretty sure. Is it this one? Or 10th of November, okay. Oh, 10th of November. No, it was one of these gaps, right? I think it was this one. Yeah, it was this one because that line's there. Okay, so yeah, this is probably where it came to. Okay. Shit, where the fuck is that thing on? Right there. Extended. Okay. All right, so I was actually aiming for the 50% of the not this shit. The 50% of the constant encouragement. Is this the fib? Check. Yep. Let me just put that on the right. There you go. So I was actually aiming for this area here, the 50% of that open range gap. No, sorry, I was actually aiming for the opening range gap low, but the lunch low was just above it. And sometimes when it takes a session low, it does another retracement and then wherever it goes lower. But at that time, if I go to the performance stats, at that time, like as you can see, it was $170 on the day, and I was content with that, to be honest, because I already measured out my risk and everything for that thingy for that day, like how much I'd make or whatever. And $170 is $30 away from that target of hitting 200 for a base hit, so it's fine, no worries. So I was basically just content at $170, and when it hit that lunch low, it just made a nice wick on it. So I was like, got out of there, nice, perfect. Sell it out, and then yeah, and then it retraces. And this area here, this is the org, and I actually had a limit here, another limit to scale in, because usually when they come really close to that org constant encouragement and it's a draw, they'll sometimes not do it straight away and they'll retrace back into a PD rate. When it's imbalances like this, that PD rate is not like these imbalances are really strong. It doesn't go all the way up here, it goes up there somewhere, really tight within the range. It doesn't need to, like right here, I don't even think I went to a premium, did it? No, it just touches the premium a tiny bit, that's all. Sorry. So yeah, it just touches the premium and then goes lower. So it's like really bearish basically. Yeah, it made the yeah, sorry. So you can see it touched the premium and then it goes lower, and there's more sell side here and lunch low again. It's smooth, comes below it, eventually comes to target. So I could have scaled another one in here as well. And my stop loss probably would have been there, so it would have been good. Again, profit somewhere here. Nice, where it's all good. And mind you, on this day I was only risking $50. That's it. Was it if I risked $100 on this day, I would have made double the amount. that I made probably $350 alone. But yeah, I want to go over this trade again because I didn't go over it. So not only is a 50%, because I don't enter on like a 50% retracement of a fib range. I don't do that. Only go to the 1 minute time frame and go over here. Yeah, in the 1 minute time frame, this is a this is my model pretty much, but it has a um, allowed me to enter from here, is what I'm saying. And I could have entered right here as well, but usually like when you enter like this late and you have entered from here, it will usually give that retracement. So I'm more comfortable entering on that retracement. And this was also close to when it was close to NYAM, which is right here, the NYAM high. And likely that's also a reason why they came back up on Friday, because they need to clear that NYAM high. I bet they cleared that on Friday quite nicely. I'll check later. So it was in line with time as well. This one was in line with time as well. I actually entered here at 3 minutes before the 12:50 macro, which for the New York traders, it's the 7 a.m. macro. I entered again here, which is right at the 12:50 macro, which is 2 minutes after that 7 a.m. macro. So it was all good. These were all good trades. And then here was the NYM session in itself. I don't think there was any news on the NYM either. It just literally just died. But it's still time aligned. Yeah, it's still allowed to enter the NYM session for the index futures. It's not like it's one of them sessions where it's meaningless. It does have volatility. But anyways, this was simply just a 50% retracement. Comes into it, boom. All right, and that's why you get better precision when you actually do it like this. So when you go like this, from where the bodies are, and you get much better precision, because if you look at it here, I enter at 2.5. Well, this is probably spread or something, but it's 2.5, 5.700. So I don't know why it entered me all the way down there, which is a bit away from it. I mean, my stop is actually gets trailed here, and you can see this was actually quite a nice forest reward. Nice forest reward. That was nice, but I could have had if I held it as a runner. And realistically, where would have I held it? I probably would have held it all the way to the low. Like that's the max I'd go, filling this open range gap. If I had one runner, that would have been 23 risk reward. That's crazy. If I held this runner up here, no, not that one. Yeah, say I held, no, if I held this runner up here, pretty much the inversion high. Right, so if I held this runner all the way up here, and all the way till down here, and to be honest, I would do this one day when I've built enough capital. I'd been 86R. Yeah, and this is possible, by the way. I've done it before, but it's just so exhausting in the end and gratifying as well. All right. Another thing you should understand is this isn't just a one-time thing where I've had um, highs and lows of catch of the day and don't hold it. I mean, I've literally gone over the trade seller data and it's shown that I have an average RR potential 17 risk to I actually do catch the um, high of this session, and this right here would have been a really nice risk reward. This was also a 30-second entry, not a 1 minute entry, 5 minute entry. But it was mainly from this is the alignment I liked. And it was in line with the 2 minute and the 5 minute at the time, as I remember, which is very nice. 25782 right there. So unfortunately, well, not unfortunately, but you can see the stop out on these are crazy. 5.91 are really fast. If I held this to the opening range gap low, 48, no wait, what? 68 R, and then I re-enter on the first presented fair value gap, because I knew this was also a one-sided market, so it usually doesn't come back up on a one-sided market. So actually, I'm doing a bit of a spread on this one. And you might ask, where did you stop going in this kind of area? This would be the opening range gap. Not opening range gap, sorry, the opening range gap high or low. And it usually doesn't come back there till quote unquote later. And later just means when it's hit an objective in the opening session, bell, whatever, and that's why I put my stop here. It basically acts like a breakaway gap, like, and it is a breakaway gap actually because this whole range took out that low, so it is a breakaway gap. But you'd aim for, well, I aim for about 2 on this or so, or 1.6. I just want to be done for the day on this one. This is again $50 risk. Actually, re-enter right here as well with the optimal trade entry around there. I think I'll put my stop right here, this high. So yeah, and then say I held this as well, which is so much not realistic, is it? Let's see. Actually, if I held this, I would have got stopped out or break even or something. But if I held this with the exception of this high, yeah, that would have happened. Or if I held it to this opening range gap high because this was an early start of the week, which was 12th of November. And I had this high as my stop loss. As you can see, it would have been 11 risk reward. So that would have been a decent day. Like most of these days I have in it, is I can hold really big runners and I can make a lot more than just $200 pretty much. I'll already calculate how much I would have made on this one as well. It would have been roughly 1,700 or so. It's crazy. I don't think it shows the other day I since I took a payout. I don't know why it does that. Sets the whole chart or something. But that's about it. I'm gonna go over Friday as well, just really quick. Because I actually had this marked down 150k combine, actually took a loss here. And I ended up taking over the loss right here somewhere, even though I went into equity, so I took a loss. But then I ended up re-entering this break. I had my stop, I believe it was here somewhere. Sorry, the London high, and I recovered most of the loss, and it put me at break even. No, sorry, not break even. It put me at 100 for the day. Pretty decent, I guess, given that a couple of losses on this Friday. But to be honest, I wouldn't really trade a Friday again like that. It was an OPEX day. I just decided to trade it anyways because it was a combine, and combines don't really mean anything much, but should really just treat it now like long-term process again. Yep, stay away from sugar. That's another thing. Come bring the day. You can see still bearish, and we have let me just clear everything off this chart. We do have, as you can see, this. So as you can see on the daily, we do have this daily. Daily is we have got a daily sell program, and it happened right at that quarterly shift. So it's basically indicative. So we'll come from this low first. This is where all the dip buyers got in. The sensitive thing buy the dip here, and it actually went higher for them. I think that's full smooth, and they'll come for the stop losses here. Also equal lows are these areas, and there's also a phantom here. So yeah, it's right here. So they've already taken this part of the phantom. There's still somewhat of a phantom here. There, so retail will constantly of this phantom as they. So I don't think they're done with this bearish market yet. If you go to the weekly as well, I feel some Bitcoin, so I think they'll have it on a Nasdaq. They don't, but they'll probably have it on Nasdaq soon. On the Bitcoin's like kind of like a barometer when it comes to all of this. On here, it's already made a change of state. Bunch of them, look, change states. So and the weekly dies. Now and till next time. Be safe. Oh shit, it's not ending, is it? Well, this is awkward.